Hello, everyone. Welcome to our session on a fundamental concept in auditing. Audit risk and its components. For those of you pursuing a career in auditing, especially here in the Philippines, okay. Understanding this topic is not just academic, so it's absolutely crucial for your future practice and, of course, for CPALE. Audit risk is a crucial concept in financial auditing that helps auditors to evaluate the likelihood of material misstatements in financial statements. So for today's tutorial, we are going to dissect the components of audit risk. This is a very important topic now. So that the components of audit risk include inherent, control, and detection risk. And we're going to explore strategies for their management. Okay. So here's the roadmap of what we're going to cover for today. We'll begin by defining what audit risk is. Then we're going to dive into the audit risk model, which is also the framework, the core framework of this audit risk now. And then we are going to thoroughly discuss each of its components, the inherent risk, control risk, detection risk, and we're also going to discuss the relationship between risk components, responding to assess risks, and the importance of PAS, the Philippine Auditing Standards in Risk Assessment. So this is in the Philippines now. Throughout our discussion, we're going to talk about PAS. That's your primary guide. And then at the end, we're going to wrap up with a summary and key takeaways. And we're going to answer some CPALE-Type exam questions. So if you're ready, then let's start. Okay, let's start by introduction to the audit risk. So what is an audit risk? Audit risk is defined as the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. This risk can arise from errors, fraud, or misinterpretations. So let's start with the most fundamental question. What is audit risk? What is it exactly? So simply put, okay, audit risk is the risk that an auditor will issue an inappropriate audit opinion. So when the financial statements they're auditing are in fact materially misstated, so imagine giving a clean bill of health to a company's financial statements, only to find out later they contained significant errors or even fraud. So that's audit risk playing out. Akala ng auditor malinis ang financial statements or yung libro, pero hindi pala. Okay, so yun ang danger or yung tinatawag natin na audit risk. So causes and impact on auditors. Audit risk can stem from various factors including errors, fraud, or misinterpretations of financial data. Remember that not all clients ay nagtatago ng problem sa books nila, no? So there are times lang na may error sa recording, or pwedeng mali lang ang interpretation ng management or accountant sa mga accounting standards. That's why it's really important to always go back kung ano yung mga standards natin, like yung mga PFRS, GAAP, mga IFRS. Ito si mga standard that we actually follow. So impact on auditors. So the presence of audit risk challenges auditors to ensure accuracy and integrity in their assessments. So while that's the job of the auditors, check and balance, correct? Okay. So why is this important to know? Because it directly impacts the reliability of audited financial statements. It affects public trust in the auditing profession. A core concept in every audit engagement to develop an effective audit plan to mitigate the risk. And also, the PAS 200 overall objective emphasizes reducing audit risk to an acceptably low level. Understanding audit risk is essential for auditors to develop an effective audit plan. It helps in allocating resources effectively and determining the extent of audit procedures necessary to mitigate risk. Okay, now we have here the audit risk model. You have here the audit risk equals inherent risk times control risk times detection risk, but this is not actually a mathematical formula. Later on, we're going to discuss this more. Okay. So inherent risk. Let's go to the inherent risk now. So I was looking at some of the pictures to show you in the most simplest way, in the most simple way, what inherent risk is. And I saw this picture of a building construction, no? Where you can see a worker or a laborer hanging at the steel or scaffold. I don't know how you call that. I think it's, I don't know. I'm not an expert on that. But you see this guy, nakahang siya, no? So, pwedeng nilalagay niya ng alambre yung bakal, I think is for the foundation. Nilalagay niya ng alambre yung mga bakal para so they can stay together and it's matibay. That's just what I thought. But we all know that this job is dangerous and he could fall. So in this line of work, the danger or risk of falling is already inherent to the nature of the work. So that's what I'm saying. That's why you call it inherent, because it's already in the nature of the job of this guy. The risk of falling is already inherent. Okay. So what is really the definition of inherent risk? Inherent risk refers to the susceptibility of an assertion to a misstatement, assuming no related controls are in place. It is influenced by the nature of the business and the environment in which it operates. Okay, that's what I'm telling you. It's already there. That's why it's inherent. It's already there. That's already the nature of the business or of the operations or of that product. Inherent risk exists independently of the internal control system. It is characterized by factors such as complexity of transactions, industry conditions, and financial health of the entity. Okay. Complexity of transactions. High complexity in transactions can significantly elevate the inherent risk, making it harder to manage and assess. While industry conditions, the inherent risk can vary significantly based on the conditions and dynamics of the specific industry. And the last one, the financial stability and health of an entity directly influences the level of inherent risk associated with it. Several factors can influence inherent risk, including economic conditions, management integrity, and the nature of the business operations. So understanding these factors helps auditors assess risk levels effectively. Okay. Examples of high inherent risk. Okay, what happened here? A second. Examples of high inherent risk situations include companies in volatile industries due to market fluctuations and instability. Entities with a history of fraud face heightened inherent risks, impacting auditors' trust and scrutiny levels. Organizations with complex financial structures have increased inherent risk, making audits more challenging and critical. Auditors must be particularly vigilant in these cases. Now let's go to control risk. Control risk is a risk that a misstatement that could occur will not be prevented or detected by the entity's internal control. So it highlights the effectiveness of an organization's control systems. So here in control risk, it's more of the internal control of the company. So this is more of the management, no? Management control na siya. So this is not about the nature of the business. So it's more on how the management's actually doing everything they can to prevent any fraud or errors and to reduce the risk. Okay. So again, what is control risk? Control risk is defined as the risk that material misstatement will not be prevented or detected on a timely basis by internal controls. So it is influenced by the design and operations of these controls. Okay, so this is what I mentioned to you, no? Internal controls fail to detect or prevent material misstatements, and here we can see the influencing factors. And material misstatements can have significant financial implications, highlighting the importance of effective internal control. So auditors assess the effectiveness of internal controls to determine control risk. Okay, this involves evaluating the design and implementation of controls as well as their operational effectiveness. So when we do, when auditors do evaluation of internal controls, they perform assessments, and then they ensure that they meet the regulatory standards. Determining control risk is also essential for auditors to understand kung ano yung mga potential weakness ng company, ng internal control ng company. And then assessing operational effectiveness also involves checking how well internal controls operate in practice and their impact on financial reporting. So to check that, meron ba segregation of duties or what's actually in the policy is actually being done in the actual operations. So they do that checking, no? And assessment as well. So ano yung mga examples of control failures? Control failures can occur due to inadequate segregation of duties, lack of supervision, or ineffective policies. So inadequate segregation of duties can lead to significant control failures, allowing for errors and fraud to go unnoticed. While ineffective policies can contribute to control failures by failing to provide clear guidance and expectations for employees. So ito yung mga nakakalito, no? Sabi sa kaliwa, pero dapat pala sa kanan. So dapat ganito yung gagawin pag nagkaroon ng mga issue. Pero for the actual one, ganito pala ang ginagawa ng employees. And then, nakakalito rin because especially kapag walang segregation of duties, nakakalito rin minsan, sino ba dapat ang mag-a-approve? Sino ba dapat, anong level ba dapat ang approval? Baka mamaya, eto si manager, wala pala siyang approval limit, approve lang siya na approve. Dapat pala, si senior manager or si director ang dapat lang mag-approve. So may mga ganong cases. Lack of supervision. Okay? Especially dun sa mga bago. Lack of supervision can exacerbate control failures such as employees may not be held accountable for their actions. Baka si friend, si kumpare, si kumare, usually when you are you've been in the company for so many years, no? Ang nagiging ninong at ninang ng anak mo is yung boss mo o kaya yung katrabaho mo. Yan. Now let's talk about detection risk or DR. So this should be DR, not IR, sorry. So this is the risk that our own audit procedures, when I say own audit procedures, we as auditors, the tests that we perform will fail to detect a material misstatement that actually exists in the financial statements. So ito na, yung detection risk, ito na tayo na yung may problema dito. Okay? Tayo na yung magkakaproblema pala pag hindi natin na-detect. Okay, let's see here the definition of detection risk. The risk that the procedures performed by the auditor to reduce audit risk to an acceptably low level will not detect a misstatement that exists, and that could be material, either individually or when aggregated with other misstatements. So ito yung sinasabi ko sa inyo, in short, this is an auditor's failure. Okay. So what influences detection risk? The effectiveness and appropriateness of our audit procedures, particularly our substantive procedures. Are we performing the right tests? And are they thorough enough? That's one of the questions, no? So second one is the auditor's judgment and experience. It also plays a significant role, and of course the competence and diligence of the audit team, which are vital during the audit. Most importantly, we control detection risk by adjusting the nature, timing, and extent of our substantive procedures. We also consider sampling risk, which is the risk that our chosen sample isn't representative of the entire population, and non-sampling, which refers to human errors by the auditor. Okay, so these are the factors influencing detection risk. So why it's important to understand the detection risk? This is crucial because unlike inherent and control risk, detection risk is the only component of audit risk that the auditor can actually or can directly control. So you inherent, it's already in the nature, it's already given, and the control risk is on the management. While yung detection risk, ito yung directly lang na kayang ma-influence or kayang makontrol ni auditor. For example, if an auditor performs limited substantive testing on a complex revenue recognition area, the detection risk for revenue misstatement could be high. So to lower the detection risk, we need to do more work. Okay. To reduce detection risk, auditors can enhance their procedures by adjusting the nature, timing, and extent of their audit test. This may involve increasing sample sizes, conducting more rigorous testing, or applying analytical procedures. Okay. So now let's go to the relationship between risk components. Okay. This is where the magic happens and where the audit risk model becomes truly powerful as a planning tool. There's a critical inverse relationship. Remember the word inverse relationship. Okay. Between the combined assessment of inherent risk and control risk and the level of detection risk that the auditor can accept. So here's how it works. Oops. Second. Okay. If we assess inherent risk and control risk as high, so look at this rectangle. Inherent risk and control risk, the assessment of the auditor is high. This is what I'm telling you. You need to do more substantive procedures, more. I just put here high, so I can show you that the combined inherent risk plus control risk, if it goes up or if it's high, substantive procedures high, detection risk low. I need to do something here like this. I don't know how, but I hope I can draw something here. Okay, let's try this one. So inherent risk, control risk is high. Sorry, my arrow is not good. Okay. Then detection risk goes down. The auditor can accept a low level of detection risk. If the assessment of the inherent risk and the control risk is already low, okay, then there's only less, or the substantive procedures that the auditors need to do is low or less, okay? And the auditor can accept a high detection risk. So that's why they have inverse relationship, okay? Okay. Now, let's move to the next one. Okay. Responding to assess risk. Okay. Once we've assessed the risk of material misstatement, what do we do about it? So PAS 330, you can look at that online. The auditor's responses to assess risk provides guidance on this. Our responses can be categorized into two levels. First, overall responses, which affect the entire audit strategy. This might involve assigning more experienced staff to a high-risk engagement. Second, increasing the level of supervision for the audit. And most importantly, incorporating an element of unpredictability in our audit procedures, meaning we might test areas that management doesn't expect us to. Second, responses at the assertion level. These are specific adjustments to our substantive audit procedures. Okay, the nature, what type of procedures we're going to perform? Example, inquiry, observation, inspection, recalculation, confirmation, analytical procedures. Timing, so when procedures are performed, interim or year-end. And the extent, how much testing is actually done. Example, the sample size. Are we going to, for example, in a sample of 1,000 invoices, are we going to do 50%? Are we going to check 50% of the invoices? Or you're going to check 30%, 20%, or only 10% of the invoices? So that's the one that you need to plan and make a decision so that you can when you do the assessment of the detection risk of all this risk, you can accept the lowest possible audit risk. That's a combination of all of this, no? So remember this key principle. The higher the assessed risk of material misstatement, the more persuasive audit evidence we need to gather. So again, if the assessed risk of material misstatements is the combination of IR and CR, remember in my previous slide, okay, the higher the inherent risk, the control risk, the more substantive procedures that we need to do. Okay, keep that in mind because it's really important. Because in the exams, there's quite a lot of questions related to audit risk. So the importance of PAS in risk assessment. Throughout this presentation, I've repeatedly mentioned the Philippine Auditing Standards, or PAS. These standards are not just guidelines, they are the authoritative framework that governs how audits are conducted here in the Philippines. So specifically for risk assessment, there are several PAS are paramount. So PAS 200 sets out the overall objective of an auditor, including the need to reduce the audit risk. PAS 315 is critical for identifying and assessing the risk of material misstatement by requiring auditors to gain deep understanding of the entity, its environment, and its internal controls. PAS 330 then dictates how we as auditors respond to those assessed risks by designing and performing our audit procedures. And even PAS 240, okay, which deals with fraud, recognizes that fraud introduces an inherent risk of material misstatement that auditors must specifically consider. So compliance with PAS isn't just about following rules. It ensures consistency in audit practice, guarantees the high quality and reliability of audited financial statements, and ultimately serves to protect the public interest. Okay? Now we are in our summary and key takeaways. Okay, let's quickly recap the points from our discussion. So audit risk is the risk of issuing a wrong audit opinion when financial statements are materially misstated. We manage this using the audit risk model. So audit risk was IR times CR times DR. Inherent risk is the susceptibility of an assertion to misstatement before controls. So this is the nature. We talk about inherent, that's given. That's the nature already. While control risk is the risk that internal controls that's under the management, won't prevent or detect misstatements. So this is under the management control, guidance, or control. And detection risk. So this is the risk that auditors' procedures won't detect material misstatements. So detection risk, ito naman yung kontrolado ng auditors. So auditors primarily control detection risk by adjusting, remember they were adjusting the nature, timing, and extent of substantive procedures. So kapag ang detection risk, para mapababa mo siya, sabihin yung danger or yung risk na hindi ma-detect ni auditor or hindi makita ni auditor yung mga fraud, errors, kailangan ka mag-sample. So, kailangan mag-check. So, let's say, your detection risk is probably your inherent risk and control risk are, the assessment for inherent risk and control risk masyadong mataas. So, as an auditor, para mapababa mo yung audit risk, in general, yung overall niya. So, kung feeling mo may ginagawang hindi maganda si management or feeling mo yung business na yon is very susceptible sa theft or sa fraud or sa errors, ikaw bilang auditor, you need to do more checking. kung merong 100 invoices, for example, kung kaya mo i-check 100%, i-check mo. But of course, it's not possible, no? You cannot check everything. But at least check 60%, 80%. At least maging maging kampante ka that all their invoices are correct. They are properly supported by contracts. Yung mga payments properly supported by invoices, official receipts, and PO, like let's say they're properly approved by the upper management, so may proper PO. And also yung three-way matching na sinasabi natin, no, three-way matching. Meron kang invoice, may OR ka, and dapat may na-deliver. Let's say kung goods yan, na dapat na-deliver sa company, may nag-receive, nasa atin yung items. So before natin siyang mabayaran, unless kung advance payment siya. So yung mga examples na ganun. So just want to make sure na covered tayo, okay? As auditors. And understanding and assessing this risk is crucial for an effective and efficient audit. So PAS provides the authoritative guidance for risk assessment. Okay. Ready? Are you ready for the quiz? Okay. Now let's start. For question number 1, okay. Which of the following best describes audit risk? The risk A, the risk that the auditor will not be paid for the audit engagement. B, the risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated. C, the risk that the client will suffer a business failure. And D, the risk that the internal controls will fail. You may pause this video, just give you some time to think, okay? For this one, the correct answer is letter B. The risk that the auditor expresses an inappropriate audit opinion when the financial statements are materially misstated, no? Okay, now let's go to question number. Oh, okay, nice. Okay, now let's go to question number 2. According to the audit risk model, if an auditor assesses inherent risk and control risk as high, which of the following is most likely to occur? A, detection risk will be set at a high level. B, substantive procedures will be reduced. C, the auditor will perform more extensive substantive procedures. And letter D, the auditor will issue a qualified opinion. Okay? Now you can pause this video to think. Okay. The correct answer is letter C. The auditor will perform more extensive substantive procedures. Remember, no? I was talking about this over and over again. Inherent risk, control risk, high. Remember the arrow? I did some arrow. So what I mentioned to you, so if inherent risk and the control risk, remember when I put the arrow like this, high, the detection risk, you need to lower it to be acceptable, no? So how are you going to lower this? You do substantive procedures, sub-procedures. So ito yun. Auditor will perform more extensive substantive procedures. So you do more of this para mapababa tong si detection risk. Okay? Now let's go to the next question. Okay, question number 3. Which of the following factors would most likely increase inherent risk for an account balance? A, strong internal controls over the account. B, the account consists of routine, non-complex transactions. C, the account balance is based on complex estimates and judgments. Okay, complex estimates and judgment. Okay, yan ang mga keywords, remember that. And letter D, experience and competent management. Okay, you may pause the video to think. The correct answer here is letter C. The account balance is based on complex estimates and judgments. So the question is, which of the following factors would most likely increase inherent risk for an account balance. Strong internal controls over the account. Your internal control is already strong, so that means your control risk is low. Sorry, controlled, yeah. So if the internal control is high, okay, I need to put something here. I see. Don't be confused with internal control and control risk. Internal control is the doing of the management. If the internal control is strong or high, your control risk or the danger of not having a good internal control, that's what it means. Your control risk is low. Okay? The account consists of routine, non-complex, that's the word, non-complex, it's not complicado. So the risk here should be low. Okay, and let's go to letter D, experience and competent. The word is competent management. So if we say competent, that means they have a good internal control. That's how I look at it. So hindi lang tama dito sa mga options na to is account balance is based on the word complex. Basta if you see the word complex, no, complex, it's either complex transactions, complex operations, complex yung nature of the business. Tandaan niyo pag may word na complex, lagi yan ang risk. Risky lagi. Pag ano yan, kapag complex. Sorry. Pagka complex ang lahat, risky. Remember, okay? Now let's go to question number 4. That's right. Okay. Control risk is defined as the risk that the auditor's procedures will not detect a material misstatement. So control risk is defined. Ito yung control. Ito yung pinag-usapan natin na yung management. Okay? Auditor's procedures will not detect a material misstatement. B, material misstatement will occur and not be prevented or detected by internal controls. C, the financial statements are susceptible to misstatement before considering controls. And D, the client's business will fail due to poor internal controls. All right, you can pause your video. You can pause the video to think. The correct answer is letter B. A material misstatement will occur and not be prevented or detected by internal controls. So it's from the word control risk. Okay? So merong misstatement, merong material, hindi lang basta misstatement, material misstatement will occur. Ang pwedeng mangyari. And hindi siya mape-prevent or madedetect ng management. Yung internal control na deploy or ina-apply ng management. Okay? Yung first one, detection risk to. Yung letter C, inherent risk to. Okay? Yung letter D, not necessarily the client's business will fail, no? We're just talking about the audit. Not necessarily the business per se. Not necessarily yung bumagsak yung business or what. So we're just talking about the audit. Okay, question number 5. Which component of the audit risk model is directly controlled by the auditor? Okay. So this is very easy. Component of audit risk. So what are those components, no? Okay. Inherent risk, control risk, detection risk, both inherent and control risk. Okay, you may pause the video. Pause the video so you can think. The correct answer is letter C. I've been explaining for the whole time. Detection risk is the only risk that can be controlled by the auditor. So let's go back. Inherent risk, this one is nature. Ito na yung pinaka-nature. What happened? Sorry. Yung inherent risk, ito na yung tinatawag nating nature. Inherent. Sorry for my handwriting. It's difficult to use a mouse. One control risk, ito yung management. Ito yung controlled by management. Yung detection risk, ito yung directly controlled by auditor. In letter D, panggulo. Okay? All right, now we're done. Okay, thank you for so much for your attention and participation today. So understanding the audit risk is foundational to your journey as a competent and ethical auditor. So keep studying diligently and remember that continuous learning is key in this profession. So if you found this video helpful, please give it a thumbs up, share it with your fellow students, and subscribe to our channel for more valuable content on accounting and auditing. So your support helps us create more resources like this for free. Thank you so much.